For this video, we're going to go over a counter trend trade setup here we had in SPY, which is a S&P 500 ETF. So here we can see that we were just downtrending in this channel here, and we were looking for potential bounce play at the 55 EMA on the 15-minute chart. And so you can see here on our 15-minute chart, once it hit the 55 EMA, it broke through, started trading sideways, and this was looking as a potential support area. So we'd be looking for a potential long play. So when we go back over to the 2-minute chart here, you can see that we started to break above the 21 EMA here, and once we broke above the 55 EMA in this general area here, we'd be looking to take a long, with our stop loss being at the 21 EMA. So if price action came below the 21 EMA, we'd cut the trade short and just be stopped out for a potential loss. So here you can see that once we broke above this area here, we would have been in the trade and just riding it out until near the end of close here. You can see that we were below VWAP, so we were downtrending most of the day as we opened, gapped up higher, and then just traded off during the rest of the day. And then well, there was basically short covering into the close. So you can see here, if we just measure what the gain would have been for this potential area, price target would have been near VWAP here. So 0.8 cents, so roughly about 0.27%, which if we're using stock options again would be a nice sizable double-digit percent gain. And you can see here that the TTM squeeze was firing with the red indicator dots, and we were turning over higher. It started around this area here that we just really started turning over, so we'd be looking to take a potential long once we saw that, but we'd want to break above support, resistance rather. So the 55 EMA would have been resistance, and this private pivot here would have been resistance. So as soon as we broke above those and we're hanging out above the 21 EMA, which we would have used as our stop loss, we would have been riding the trade. So when we look at the RSI as well, you can see that even though the stock was making lower lows, we weren't really making lower dents in the RSI. So I mean, the RSI was pretty much flat in this area, even though this is a lower pivot than this was a lower pivot. So this one hit a new low here, but the RSI was pretty much just making a double bottom with the last low that was put in, and this was an area where the RSI really started to bottom out. So this hit its lowest on the RSI, and then these lows did not register as far on the RSI. So this is what we call an RSI divergence. So when you see this, you know that the short-term momentum, either to the downside or the long side, is running out of steam, and we'd be looking for a potential reversal. And when we see the TTM squeeze forming, we have our RSI breakout, and TTM histogram is turning upwards. Once we reclaim the 55 EMA here, then we'd be in the trade for a long play. And yeah, that's basically a counter trend reversal play that we'd be looking for our trade setup. So that was our S&P Spiders ETF counter trend trade. Thanks for watching.